time, let's get a look at the bigger picture as we're hitting new highs. We're hearing from our Fed head and waiting on key inflation data and then earnings. Ed Siddell's with us, CEO and Chief Investment Officer at EGSI Financial. Good afternoon to you. How are you feeling about the market?
Well, thanks for having me back. And I like I've been saying for a while, we have a window between now through the election. I think the market is going to finish off positive for the year, but I think we're due for a correction. 10%, maybe a little bit more, but I think by the end of the year, we're going to finish strong.
So you do feel we'll finish strongly. So that being said, I mean, when there are dips, do you tell people buy the dips?
Yeah, but the way that we do it, I mean, most of our clients, it's longer term hold. I mean, it's all about a longer term strategy. But there's so much cash sitting on the sidelines. I mean, there are really good values out there right now, and you just really have to look and find them. But I was reading a report. There's over $6 trillion sitting in money market funds right now on the sidelines, just waiting. And those that have been waiting, for the last 7, 8 months, they've really missed this bull market run.
It's been so attractive to be in short-term bonds, money market funds and such. They're getting some return. Is that something? Is that worth something in your mind?
Oh, absolutely, absolutely. If you can, with very little to no risk, get a 5% rate of return, that's a lot better than what it was, 5 years ago. You're really outpacing inflation, not by much, but you're protecting your downside risk. But you really have to look at the long term. So where are you at? Are you already retired? Or how old are you? Are you in your 30s and 40s? Can you afford to take a little bit more risk? And again, if you sit on the sidelines, too long, you may wind up missing the boat.
I see. What do you think? We just heard a quote from Jay Powell that one thing he worries about is really having a downturn, a serious downturn in the economy while he's trying to tame inflation. What do you think the Fed should do?
Well, the Feds have been very reactionary. Instead of the Fed's policy, creating the policy and the markets and the economy reacting to it, the Feds are reacting to what the markets and the economy are doing. And they've really put themselves behind the eight ball. Right now, when you look at the interest rates for the first time in history, servicing the national debt is the second largest line item, surpassing national defense. So they really don't have a whole lot of options. As a matter of fact, Powell just said that keeping rates too high for too long could cause problems. They can't raise rates. If they raise rates, they're going to crash the economy, and everyone keeps talking about a soft landing, and that would definitely have the opposite effect. So I think they're going to wind up lowering rates. But for a fact that it's keeping Powell up at night because there's really not a whole lot of options for him other than lowering rates to keep the economy going right now.
Yeah, understood. So at this point now, you're looking to a few ways to make some money, one of which is actually in gold, right? Tell me a little bit about that.
Yeah, I still like gold, especially with BRICS. The U.S. dollar. People are moving away from the U.S. dollar as the reserve currency, and looking at gold mining stocks. I mean, they have really been on a downturn, over the last couple of years. So I think that should be at least in everyone's portfolio. Gold and gold mining, whether it's an ETF, by the index, 2 to 3% at least of your portfolio. I also like healthcare. And right now, energy is really good. Especially, you were just talking about the hurricane season. Thank goodness that it really did not hit the oil reserves in Texas. But that's another really good play going forward between now and the election.
Yeah, you mentioned gold mining stocks, ETFs. I guess that also go with gold. Is that what you're thinking?
Yes, absolutely. Yeah, not just I love physical gold. I love the having it on hand. But if you're going to invest in the market, GLD, GLDX, I like those ETFs. Those are really good plays for a portfolio.
How do you play healthcare? That's another area you think has potential, right?
I do. I think it's been undervalued for the last couple years. And, as we're seeing boomers continue to age up, rising healthcare costs, I think earnings are going to continue to increase, and they're a good buy right now. Again, long-term play, but I think it's going to be a really good play over the next 4 or 5 years.
Yeah, I want to hear more about the healthcare sector because within healthcare, there's so many facets. I mean, what part of healthcare do you like? Do you like, the big drug makers that we know so well? Is it the GLP-1s? Is it the biotech, sort of the up and comers?
Yeah, from biotech, that's really with everything that's going on, with from Ozempic. That's really going to be the big push. I think that there's a lot of room for growth in the biotech. And honestly, I really like United Healthcare. If you look at their earnings and their revenues over the past couple of years, they've been really undervalued, and I think that it's going to be a really good buy, going forward.
Right, understood. One thing that you are watching very closely is our national debt. Where does this fit in for investors? Why should they care?
Because it's such a big part of what we do. I mean, it's so inflationary. We were talking about Powell stuck. He can't raise rates. If he does, he's going to crash the economy. He even said today that if keeping rates too high for too long, it's going to have a hard landing. For a recession. So the only option is to lower the interest rates. And so with the national debt, we're adding $1 trillion over every 100 days. We keep overspending. And so what we have to do over, hopefully over the next year, couple years, is stop spending, reduce the national debt, because we're writing checks that we just can't, afford to pay for anymore. And if rates go up any further, that is going to be the largest item that we're going to have to service, and it could wind up actually surpassing Social Security at some point in time.
All right, thank you for that, Ed Siddell. Great to see you, EGSI Financial, on a record-setting day. Thank you.
Thank you.
And thanks for some of those picks, too.